Hi guys, good afternoon. It's Kingsley again from InstaFxNg, and today we're going to do a part two of our third video we released last time, talking about the London sniper strategy. And then the main focus for today will be to show us the building blocks for the London sniper strategy, how to look at levels, how to section our charts so that we can zoom into what we call strike zones, and then place trades on levels where we are guaranteed of booking profits consistently over losses that we can anticipate, of course, using quality risk management skills. And then shortly we're going to be seeing how that works on our live charts, and also we will be placing a trade in that regard. At the same time, because of constraints in time, we will be seeing a couple of additions to that when we look at the part 3 next time when this video ends. In the meantime, I'd like to stay tuned and then eyes glued on the charts. Let's see how we get it started, and then aim for the moon. Okay, I'm on a plain chart showing us the Euro USD on a 1 hour time frame. So we're going to see, first of all, what we call the market structure. You want to be able to identify the trend of the markets as the chart reveals to us using the correct time frame being selected. And closely, you want to see that consistently there are more bearish candles aiming for the downside as compared to the little retracements to the upside. So clearly we can define this market structure to be a bearish market. And then there's usually one trade action to take after you identifying the market structure. For bearish markets, you want to be bearish, you want to take sell orders, you want to go short on the currency pairs. And of course, the converse is true when we have a bullish market structure where we see more bullish candles to the upside compared to candles trying to reverse to the downside. And then of course the trade action to take will be to place buy orders for that currency pair. And then but then sequel to that, you want to be able to locate what price levels do you enter, and then two, you want to see how do you aim for take profit locations, and then thirdly, what risks do you want to bear going forward. Now allow me to digress a bit from the main concept being spoken about. I'd like to introduce you to a skill used in risk management. We'll call it the risk reward ratio. That means if you are aiming for 10 pips profits, you want to be risking, in my opinion, 5 pips as against 10 pips profit. So that can be simply put on a 1 to 2 risk reward ratio. In other words, for every 1 pip you are willing to risk, it's because you're aiming for 2 pips in terms of profits. So that means 5 pips risk being risked, aiming for 10 pips booked as profits. 10 pips on the risk side, and it means you're pursuing 20 pips on the upside. And of course, where your account balance can afford a 30 pip risk, you will be targeting 90 to 100 pips booked as profit when you close up trades. Now, that being said, this is our market. We first of all drill down into the 1 day time frame. You know, the 1 day time frame gives us an overview, clear overview of all that's happened within a month. It gives us 20 to 24 candles of price movement within a month, and it's more dependable because of the quality of candles we see. Now, looking at my screen, you're getting to see my charts showing us that price moved up consistently over a couple of 1, 2, 3, 4 months. You know, reversed to the downside over the course of 1.5 months, built strength again, and then blasted off 1, 2, 3, 4 months consistently, fell into a consolidation range for the next the month of March through April. It's been crashing to the downside. In other words, 1 day time frame market structure says bearish. Of course, the equivocal market order to place will be to sell. Having got that established, we move down to the next lowest time frame, being the 4 hour time frame. So let's drill in fast to that as we get closer to our strike zone. All right, then now we got this up on our charts. This is the 4-hour time frame on the Euro USD. Clearly we can see that the chart permits us to see all this happen within the week, and for a couple of weeks you can see the consolidation range where the Euro USD was trapped for a while. 1, 2, 3, 4, 5, 6, 7 weeks consistently, moving up and down within that range, for which about 150 pips, I suppose, exchange hands. You will expect to want to master over 230 pips. Actually, you would want to master a trading strategy that will allow you take advantage of consolidation ranges. But then that will be a special, I promise you, for another series. Currently we're going to be focusing on what I call the London sniper strategy. You are trading like a sniper and you are aiming for the London open time. Again, we've been able to establish the market structure for the 1-day time frame. We also decided on what trade orders to take, and then to corroborate that premise, that fact that you've got for the 1-day time frame, you want to drill down closely to the 4 hours time frame so that you find a supporting premise, to make that move in your favor. So since 7 weeks, locked within a consolidation range, and in the 7th week a downtrend began to occur consistently for the next 1, 2, 3, 4, a short correction to the upside, and then a huge tank. This week beginning Monday, it moved so far over 220 pips, aiming for 30 if it closes on a lower low today at the end of the New York trading session today. So the 4 hours time frame, similarly like the 1-day time frame, says a market structure is bearish. Of course, the market orders being placed will be to sell. Question: where would you be selling? And now on markets like this, you want to be sure that you're not caught in a reversal to the upside and then you're losing your precious pips. So you want to be able to select what I call areas of key price resistance, popularly known as support and resistance levels. Now, how do you do that? Simple, but then watch me very closely to get this right. Looking at my charts, you will notice that the downtrend beginning here, allow me to plot the trend line here, beginning here, and then rolling down close to this end. There was a consistent down move, along this trajectory. Now you want to be on the selling side somewhere around here, and then I like to use the line chart to place my trend lines. They tend to give me close prices which are more effective, for drawing trend lines. So you want to be doing this so you can see it nice and easy, accurately placed, and ensuring it touches all key areas where price made a turnaround. So we've got a clean downtrend here, lower highs, of course lower lows. We can even build a channel out of this, and this is pretty easy when you get a good hand over it. So I got this here. Okay, here. So stay with me on this now. This one, and then we got the top one right here. Okay, so now that's our channel. So this is a clean downtrend occurring on the Euro USD for 1, 2, 3, 4 weeks. And the reason on the 4th week there was a break to the upside correction before a continuous move to the downside. So we could also draw another trend line down this price, establish something like this. Yes, to get pretty close, and then we drill down this way. Okay, and then so we got this done right. And then so we got something here we want to take a close look at now. So we can see lower lows, lower highs. It's a downtrend all the way for the Euro USD. Now during closing again into the 1 hour time frame, we have established on two time frames, the daily time frames. Market structure says bearish, and your logical trade orders will be to sell. Again, you want to consider the 4 hour time frames. Market structure says bearish, and the logical trade orders will be to take shorts. Now your strike zone, which is our 1 hour time frame. I like to do this all the time, but then before I move down there, I want to locate key areas of resistance on the 4 hour time frames, areas where prices couldn't break to the upside, and of course areas where prices reacted significantly on the downside. You want to see those areas, mark them out, and then anticipate that prices will repeat what it had done in history yet again in the future. So we got these clean locations, mark that, and then we want to be seeing this happen again today. Okay, being a downtrend, we should locate areas of resistance much more than support. So having established this, we drill down close into our 1 hour time frames, and then we've got this. So it's 1 hour time frames, scale out to the right. So we got this now. So we got this. See this now. So it's so clear. You want to be doing this today. Now taking a look at what I just did here, you'll see that every time price came around the resistance areas, there was key reversals taking place in the market. You want to see this happen, take a buy from here, somewhere here, and risk this range. Moving up to the top side, price gets here, makes a short reaction first here, reaction breaks it up above and moves on to the top side. And then so for today, you want to be saying for this week, today being Friday, that's here, Thursday, Wednesday, Tuesday, and then Monday. Now look at price moving from Monday all the way down. Look at resistance area being located here. You want to be involved in a trade like this. So allow me to adjust this for precise analysis. Now this is pretty cool to do, and then we got this here. Okay, so that's price reacting significantly on those areas. You want to see this happen often. You want to see this happen again and again, and then you want to take advantage of it happening. So every time price broke through the upper trend channel, it moved significantly to the top side, like it's happening here again. So it's taking support on the trend line here. So price breaks above here, moves down clean, and then to the downside. So we want to see this happen on the candlestick chart now, and so we are seeing this happen smooth, and no reaction of price within the top side of this range. Now so sell here, place another trade here, right here, move down right here, buy at this location because it's a major support, of course, in the short term, and then attempt to enter the market right on this line. You can see my entry level screen line here, nice and easy. And then because I was looking at a quick buy within the Friday time zone, I want to see that price will be able to break this resistance as far as here. So, but then price never came to my entry level, but significantly it went all the way down, booking us about over 100 pips, 69 pips. to the downside before retracing back to my suggested take profit level. But then you want to see that when particularly would you have taken a trade today, being today itself for that matter. So let's zoom in pretty close on our time frame, and then you want to mark out GMT 8 o'clock, on the charts being 1 hour ahead of the GMT time, so being here. So we got this. So you are aiming to take a trade off a sell order, off this key resistance line, price having broken it once, attempted to break, held strong, broke through, but then fell out again. Now attempting to break up through. You want to place trade here and ensure that your stop loss is quite at this location. So if you have done this, friends, you will be in 69 pips profit at about say 15 hours GMT. That would be at about 3 p.m. London time. You'll be closing your trades at 69 pips profits, on the downside. Now that's a building block as simple as that of the London sniper strategy. Get the market profile beginning from your 1-day time frame. You want to see the market structure, establish a trade order, support that logical decision with an immediate time frame being the 4 hours time frame. Establish the market structure, logically decide on the trade order, and then zoom in pretty up and close on the 1 hour time frame. You want to be able to establish areas of key price resistance and support levels, and then trade off those areas based on what we decided on the 1 hour time, on the 4 hours time frame, I beg your pardon, and of course the 1 day, the daily time frames. So when you do this, you want to use the risk reward ratio also to place your pending orders in the event when price hasn't arrived at your entry levels. So if I use this channel as our stop loss, we'll be considering 30 pips clean as stop losses, and then consider ratio 1 to 2 would have been a perfect support risk management skill being applied for the London trading strategy here. So you want to be able to do this next week. You want to do this on Monday when the market opens. You want to be able to trade off these levels I've shown you. You might go ahead, open up your charts, make them come alive. Let's say you repeat this on the 1-day time frame, on the 4 hours time frame, and then zoom into the strike zone being the 1 hour time frames. Place your areas of support and resistance, and then let's see you book those profits. And please make your comments down below. We'd like to read them, and of course reply to them. Definitely you'll be subscribing to our videos, and we promise you high quality videos and tutorials on better trading strategies going forward. Thank you, and wish you a peaceful week ahead. Bye bye.